You ever see a stock move so fast it kind of gives you whiplash? Yeah, that's pretty much what just happened with a company called GWH. We are going to break down one of the wildest single-day moves I think I've ever seen and use the hard data to try and figure out what in the world is going on. All right, let's get into it.
I mean, just look at that number, 141% in one day. So on October 10th, GWH stock goes from $1.72 at the close to $4.16. Wow. That is the kind of move that, it creates legends, but it also creates some serious cautionary tales. And that really brings us to the big question here, right? Is this thing a rocket ship just getting started, or is it a ticking time bomb about to go off? Because the crazy part is, the technical data, it's telling two completely different stories at the exact same time. So we're going to unpack both of them. Okay, so before we can even get into those conflicting signals, we really have to appreciate the sheer force of this price move. Let's put this one-day explosion into perspective. Check out this range. In only 3 months, this stock has swung from under $1 all the way to over $5. But the real story, the one we're here for, is that jump from the day before, $1.72 to $4.16. I mean, that's not just a jump, that's a quantum leap. And get this was not a quiet move. It happened on absolutely massive volume. We're talking over 280 million shares traded. Now, when technical analysts see a huge price move on just insane volume like that, they call it conviction. Why? Because it shows a ton of money is confidently betting this stock is headed even higher. All right, so let's start right there with that conviction. Let's build the bull case. What are the signals telling traders that this incredible strength might actually keep going? Well, the first and most obvious signal is just the short-term trend. I mean, look at it. The current price of $4.16 is absolutely crushing its 50-day average, which is way down at $1.66. That right there is a classic sign of some serious upward momentum. Oh, and it definitely doesn't stop there. It's like a whole dashboard of other indicators is just flashing bright green. You've got the MACD, which tracks momentum. It's strongly positive. You've got on-balance volume, which kind of follows the money, and it shows cash is pouring into the stock, not leaving it. And get this, the price is completely blown past its upper Bollinger Band. You can think of that as like shattering a statistical ceiling. It's just another signal of extreme short-term strength. So look, if this was the only data you were looking at, the conclusion would be pretty simple, right? The short-term trend is just overwhelmingly powerfully bullish. From this angle, it looks like nothing but blue skies ahead. But, and this is a big but, that is only half the story. So now we got to pivot to the bear case. Let's look at the exact same data, but from a totally different perspective and check out the warning signs that are flashing bright red. Okay, so remember that super powerful short-term trend we just talked about? Well, here's where things get complicated. The stock has just blasted through its long-term 200-day average of $2.72. Now, on the surface, that sounds good, right? Bullish. But it also tells us that up until this massive spike, the bigger picture was actually a downtrend. A one-day surge doesn't just erase months of trajectory. And that's what makes analysts start asking, is this a real reversal or is this just a temporary bubble? And this brings us to a really crucial concept, overbought. The best way to think about it is like a car's engine that's revving way, way into the red zone. Yeah, it's putting out maximum power, for sure. But it's also under incredible strain, and you just know it can't sustain that forever. A pullback doesn't just become possible, it becomes very, very likely. And believe me, GWH's engine is absolutely screaming right now. First up, let's look at the Relative Strength Index, the RSI. It basically measures how fast a stock's price is going up, and it's at 84.3. Now, for context, anything over 70 is considered a warning. Over 80, you're in the danger zone. It's a huge sign that the buying frenzy has maybe gone too far, too fast. Okay, next up is the Commodity Channel Index, or CCI. This one measures how far a stock has strayed from its average price. GWH is at a staggering 570.9. I mean, that is an almost unheard of level. It's basically signaling that the stock has stretched like a rubber band that's about to snap, way beyond its normal range. And to top it all off, the Money Flow Index, the MFI, which is kind of like a volume-weighted RSI, is at 98.3 out of 100. This just confirms that pretty much all the recent money has been on the buy side. So here's the kicker. It's not just one warning light on the dashboard. It's 3 different gauges, all in the red, all screaming that this engine is about to blow. So what we have here is a classic showdown. Extreme short-term strength on one side, fighting against extreme overbought conditions on the other. So how does this whole thing resolve? Well, analysts are going to be watching some very specific price levels to see which side is winning this battle. And this table here, this basically lays out the battlefield. So above where the price is now, you have what are called resistance levels. You can think of them as ceilings. There's one at the psychological 450 mark and another at the recent high of 533. Then below, you've got support levels, or floors, down around 231 and 190. And right now, the stock is caught smack in the middle of this war zone.
Okay, so what happens next? What are the most likely outcomes, given this intense tug-of-war between the bulls and the bears?
Well, it really boils down to 2 main paths. Scenario 1, the bullish path. The momentum is just too strong to stop. The stock punches right through that resistance and goes on to challenge the recent high of 533. Scenario 2, the bearish path. Gravity takes over. Those overbought signals trigger a big wave of selling, and the price falls back to test those support floors, maybe down around 231. So let's pull this all together. What's the final picture? First, you have undeniable extreme short-term strength, backed by massive volume. Can't argue with that. But you also have these super serious overbought warnings that suggest the stock has gone way too far, way too fast. This creates a huge conflict between the new, explosive short-term trend and the weaker long-term picture. And when you mix all that together, you get a recipe for some serious, serious volatility.
And really, that's the heart of the whole thing. The data isn't wrong. It's just telling 2 completely conflicting stories at the exact same time. On one hand, you have the story of incredible, explosive momentum. And on the other hand, right alongside it, you have the story of a stock that looks like it's been stretched to its absolute breaking point.
Which leaves us with one last thought. You know, in a situation this extreme, the biggest question isn't just a simple, is it going up or down? It becomes something way more fundamental. How do you weigh that incredible, maybe once-in-a-lifetime opportunity against a risk that could be, well, catastrophic?